The person who would be best placed to answer these questions is with us. Neeraj Gambhir, Managing Director, Nomura India, is with us. Neeraj, first on this overseas direct investment by Indian companies, now reduced to 1/4 of their original limits. Will this will this stop a lot of outflows?
I think it is going to have a meaningful impact. I think it was basically, it was really a rule which allowed Indian companies to expand their operations offshore, whether by way of acquisition or by way of, setting up joint ventures and wholly owned subsidiaries. And, over the last few years, corporate India has actually done a lot of these setups and acquisitions, which have been pretty sizable. So obviously this rule then sort of puts some kind of speed breaker on those kind of acquisitions and expansions.
Okay.
In terms of the dollar amounts, hard for me to say what will be the impact, but I guess about $3 to $4 billion should be the impact at least.
Yeah, RBI releases the monthly numbers, and in July, $3.2 billion went out under this head of ODI investments. Would it be safe to assume that will be reduced to 1/4, just as a thumb rule?
My understanding is that last year, whole of the year, we did about $10 billion under that head. So maybe July was a bit of an aberration.
Okay.
I would think that $3 to $4 billion for the rest of the year can be easily thought of as an impact.
Even June is 1.7 billion.
Yeah.
So even if we took 1.5 billion as the thumb rule, we are still coming to 18 billion, Neeraj.
I won't think that the impact will be that large, because you have to also look at the fact that they will, they have basically excluded oil sector from it. The Navratna companies have been excluded from this, and so I don't think the impact will be $18 billion, but I would think at least $3 to $4 to $5 billion is my guess at this point in time.
Yeah, they've also said that they're only restricting it under the automatic route.
Yeah.
That these will continue to be available to corporates under the approval route.
Yes.
So perhaps legitimate or demands when the rupee is not under severe pressure will be allowed. That seems to be the reading. The other scheme of using your savings up to the extent of $200,000 abroad, maybe to buy land, is now not available at all. Do you think this will be a major restriction? Have you seen a lot of people using this money to buy land outside?
Well, there is some usage, of course, but there is no hard data available on how much exactly has gone out of the country under this particular head. In any case, it is restricted to $200,000 per year per person. So there is some limitation that was anyways there in that scheme.
Yes.
So I'm not sure whether this will have a large impact, but it's a token or a gesture to say that we are now considering certain kinds of capital controls on outflows, because we've moved away from the pure interest rate driven currency defense, and therefore some kind of capital controls are deemed to be necessary at this point in time. Even though the overall size of these capital controls may not be very large, but to my mind it's much more symbolic of the fact that Reserve Bank seems to be moving into the next stage of its defense of the currency.
Exactly, Neeraj, that was going to be my next question. Please stay on for a second. We've got another guest joining us, and I want to come back to you to ask you the psychological impact that the RBI is sending out by this step, and what it might mean to the rupee movement in the days to come. Ashutosh Rana, Head of FX Trading at HDFC Bank, is also joining us. Ashutosh, directly let me ask you that question. Psychologically, when you come to trade on Friday, and when your corporate clients come, and when your exporters come, will there be a feeling that the Reserve Bank means much more than just interest rate business? It's going to come with a lot of capital controls. So let me come and sell my dollars at 61. Will that kind of an attitude prevail?
I doubt whether that attitude will prevail on so soon. There may be some immediate impact in the mornings, but undercurrent at the moment is that dollar strength is going to prevail. So we may have some more measures coming in the days to come.
No. What I'm asking is, how will the dollar open on Friday? Will it open on the back foot with an assumption that maybe you're not, the government and the RBI together are not going to allow dollar to get more expensive than 61? Will that be a psyche at all? How will really dollar open on Friday and trade on Friday?
there will be an open reaction definitely to the opening on Friday. We may open maybe around 50 to 60 pence lower than today's closing. But going forward, I don't think that this will impact too much going ahead in the days to come.
Oh, okay. Stay on, Ashutosh. Neeraj, bouncing that question back to you. What is your sense? What will be the psyche on Friday and thereafter? Do you think dollar starts on the back foot, and do you think it will be enough to make this potential speculation, if you can call it, exporters staying back from selling because they think 62 or 63 or 65 is possible?
Lata, we have a break in the market. Tomorrow we are off and the rest of the world is trading. So we need to see what happens to dollar versus emerging market currencies tomorrow. But assuming things don't change materially yesterday, but I think this is definitely something which the market is going to consider in the morning. And I think what the market is going to be worried about is that now that we've opened this step, if the depreciation does not stop, what further measures could RBI potentially bring into the... So, the point is this, the defense by Reserve Bank is continuous. Measures after measures are getting announced every week, and we are open to the scenario that even more stringent measures could get announced. So I do feel that there is going to be some impact on rupee-dollar exchange rate because of this.
Okay, can you give us some idea? Do you think 61.8, which the intraday low that we have seen, is a kind of a roof?
Yeah, so like Ashutosh said, I think 30, 40, 50 paisa is quite possible, assuming the dollar versus emerging market currencies tomorrow don't trade too out of the kilter.
Okay, but in the days to come, is this enough to draw in the those who are sitting on future dollar earnings?
I think these measures by themselves don't change the fundamental equation that much. I think what it does is it gives market that sense that there is potentially more to come, and as far as the currency defense is concerned, they're still on the front foot in terms of currency defense.
Okay. No, I'm just asking. We see a lot of people expecting that 62 and 63 could happen. Will that kind of speculation decline? Are you seeing the dollar somewhat, resistance kicking in at about 62?
I think the extreme thoughts around rupee depreciation has clearly gone out of the market. I think the sense is that in and around the current levels, maybe going up, maybe 2-3% higher, you are continuously seeing very strong defense from the central bank. You're continuously seeing, measures on the fiscal front. So the rupee's sharp depreciation from here onwards, if at all it happens, it won't be an easy affair. It will be a pretty tough affair in terms of, for markets to achieve that. The only caveat that I would like to put in is that, we are now a global currency. We trade like, at least as an emerging market basket. So we need to see what happens to dollar as a currency versus EM, as a currency versus G10 currencies.
Okay. A final question. Will this lead to Hawala really? Because these are huge amounts that the Reserve Bank had allowed, $200,000. At that level, if you're not allowed 200,000 but only 75,000, will people seek, underground methods?
Hard for me to say, but I don't think so. And I don't think this would per se lead to a development of an unorganized market of the kinds that we saw in late 70s or 80s.
Okay. All right. Thanks a lot, Neeraj Gambhir, for joining us with those details.